So measurement after recognition, the asset, the standard allows the entity to either continue with the cost model. In this case, the PP will be measured at cost less accumulated depreciation and impairment losses, if any. The entity can also choose to carry the asset at revaluation model. If it chooses to carry the asset at revaluation model, the asset will be revalued and it will be carried at fair value from the date of revaluation less subsequent accumulated depreciation and impairment losses. You need to know the definition of carrying amount. When we say carrying amount, what do we mean? You need to know the definition of fair value. If the question says fair value, what do they mean? Okay. Fair value is defined by IFRS 13, fair value measurement, as a price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. I'll urge you, these definitions, you need to start memorizing them now. These definitions, you need to bring them out as they are given. Okay? You need to be able to write something as close as possible to the way they are given. If you can't recite them exactly, but you need to write something as close, with the meaning as close as possible to what is given in the study, especially when you come to P2 where there's a lot of writing on standards. So you do well to start memorizing this definition of standards now. We will come back to IFRS 13 and look at it in more details. But once you decide to revalue the asset, you cannot be selective. You have to revalue all the other assets in that class of assets. So for example, if you revalue one motor car and you've got a pool of motor cars, you have to revalue all the motor cars. You can't be selective and just revalue one. Okay? So you have to be able to explain that. Now, two things will happen when you revalue an asset. You could either get a gain or a loss. If the gain, if it's a gain, the gain will be reported as a revaluation gain in other comprehensive income. Now, when you buy an asset, what entry do you do? When you buy an asset, what entry do you do? What do you debit, what do you credit?
Debit asset.
Okay? You debit asset with the cost, and you credit cash or bank or receivable payable if you have not paid for that asset. Okay? Then this asset, you start doing what? You start depreciating it. What's your entry for depreciation? You debit depreciation, which goes to P&L. No, you credit accumulated depreciation, which goes to the balance sheet. You do not credit the asset. You debit, you credit accumulated depreciation. Now the first entry you did on the asset went to the balance sheet as a debit. The depreciation entry credit side goes to accumulated depreciation on the balance sheet. So it's in the balance sheet where these two, they net off to create the what? The carrying amount or the net book value. Clear? They net off in the balance sheet to give you the carrying amount or the net book value. Okay? So you now revalue this asset, and the first revaluation gives you a gain. What is your entry? Your entry is to debit the asset to increase the value of the asset, and credit revaluation reserve, which goes to OCI, other comprehensive income. Yes, Mr. President. Name class. Oh, okay. I'll call you. I'll call you. Okay, so the first revaluation is a gain. So you're going to debit asset, credit revaluation reserve. What if the first revaluation was a loss? If the first revaluation was a loss, your first entry will be to debit P&L and credit the asset. Now, what if you have a second revaluation?